Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Thursday, July 26, 2018, getting on to 2:20 p.m. Central Daylight Time. Well, the president just had a speech, if you will, in Iowa. He's now in Illinois giving one. We get GDP in the morning. You got to pay attention to that, and you're going to have to pay attention to the Amazon earnings that are due out after 3 p.m. Central Daylight Time today. Lot to look at. But the dollar up, sharply lower in the metal markets. That's something you got to pay attention to. None of them held the rally because once the market understood that it was really more of a cease and desist that the U.S. and the EU agreed to while they negotiate than a new deal. Very important. Doesn't mean it won't be a new deal, but it's not quite the same thing. Of course, Facebook taking down anything in the tech sector. Remember, NASDAQ's that, and of course, part of the S&P is that, and the industrials doing well along with the small caps today. But as we come to the weekly gold chart, now you've gone from 1350, 320. The last trade's right here around the 1220, 320 area, and we're down for the week. And this will be the August contract on a weekly chart, about $8 for the week. The contract that I would tell people if they're going to trade now, you want to be trading the December, otherwise you got to get in and out of August. First notice day is August 1st. So you want to be careful there, but you have an outside day down today. An outside day down means you've taken out the previous day's low and high. In this case, you opened higher, broke down, closed near the lows of the day. You did not take out the previous high of 1244.70. If you look up here with me, 1244.60 is the high. So we now have a pattern of lower highs, and I'm thinking that's a lower low. It's hard to decide when you get one of these outside days and you take it out. It creates a nightmare on the charts for me, always. But assuming that we have that type of pattern, the bias is down, the trend is down, the lower Bollinger Band comes in at 1223.30. So if the market's going to fall to that theoretical support zone again of the Bollinger Band, that's a possible target. Because today's an outside day down, if you take out today's high of 1244.60, the odds pick up dramatically for the market to make a run back to the upside and at least maybe challenge the 18-day average. Does it have to? No. Nothing on a chart always has to do anything, but the probabilities are there for that. And momentum remains oversold, not locking into a downtrend. Not an easy market. In the popular ETF GLD, you have a pattern of a higher high and a lower low. Not an outside day down, oversold condition. So both the gold futures and the ETF have bias to the downside as both are under the 18-day average of closes. Both, if they decide to drop, have potential support at their lower Bollinger Bands. When we come to GDX, which is the gold miners, it's more bearish. You have the pattern of lower highs, lower lows. You are oversold, not embedded at this point. If you take a look here, we can come back a few days. It's always good to do this. So over here last Wednesday, the market had one of the numbers over 20. That means you're not embedded. Next day, same thing. The day after that, on Friday, both numbers got under 20. They got under 20 on Monday, and they both closed under 20 on what day? On Tuesday. Yesterday, we got a rally where the market lost its embedded reading. The only time a market can re-embed, if you lose that, because when you lose it, the odds favor you're going to make a run to the 18-day average. The only time that can happen is if you re-embed the very next day that you lose it. It's exactly what happened today. So the bear trend is back in play, putting 2120 as the possible move in the market. You'd have to take out 2180 to negate this downtrend. When I come to the gold-silver ratio, it's boring. It's just sort of stuck here. Remember in the past we were going up dramatically, down dramatically. Now the market's just sort of stuck, not going anywhere in the 68 level. When you look at silver, you had, like in gold, an outside day down. It didn't take out a previous low. You still have the pattern of higher lows, higher highs in an oversold condition. In the copper market, the attempt of a rally yesterday, and let me come to that right here, faded by day's end, but it's not that the market faded in price. Remember, the market closes 12, or settles is the right word. The settlement's determined at 12:30 p.m., but the market stays open to 4 p.m. Central Daylight Time. So the market was strong as can be, holding on until it got what? Explanation that we really didn't have a trade deal. We had a cease and desist deal, and the market with that opened steady again last night from where it was late in the day on Wednesday and fell back to the 18-day average of closes. The market is still, I'm going to say, has a bias to the upside. It closed at 280.55 over the 18-day average. The trend is up and the momentum's up. The risk in the trade is if the market takes out 273.35, the last break low. Platinum turned out now bearish today. The market threw out, what, an outside day down, and it didn't take out this previous high. So you have lower highs, lower lows, market's under the 18-day average, and momentum is starting to turn down. In the palladium market, you stalled out again against that 18-day average. You've done it 2 days now. The market has done this in the past, and each time it's stalled against that, it has proceeded back to the downside. The difference this time would be taking out the 932.30 level. If it doesn't, the odds favor that the market's going to fall back. It has still got an overall downtrend. While the dollar is up on the day, the momentum has gone flat. The trend is down because you got lower highs, lower lows, and it's stuck in all this sideways action. The market probably realizes tomorrow we're going to get a GDP number in the morning that has a 4 in front of it. The president would love to think there's a 5 in front of it, but the smart money also understands there's a certain amount of forward buying that occurred in the last quarter because of tariffs. And if you were going to avoid them, you were loading up on stock before the tariffs hit you. And the question is, forward buying sometimes takes out demand from the third quarter. Just something to think about. But the dollar index right now, pretty neutral, not doing much of anything. I want to remind you what we do with our research here at Linn. We write on so many of the different markets that you want covered, and we write it for commodity people. I admittedly write my own report in addition to these, but you can get combinations and so on. Not everybody wants to know about energies, but a lot of people might want financials. You grain people might want just the grains. Metals people might want to see a combination of that and currency reports. You pick and choose which ones you want, you see what our customers get, and then we hopefully hope that you want to become a customer of ours as well. But you'll find that we're writing pretty much 7 days a week. How do you get access to this for a trial? It's really simple. Give us a call. You can go to our website. You'll see a carousel of free offers. You can click up here at any time as well. That'll take you to the page. Just click on it and fill in what you'd like to get. I'm Ira Epstein. I'll have a lot to write about tonight as we see the Amazon earnings and all the other parts that are going to impact this market, especially in the morning. Durable goods. Have a good day.